Starting this week, a ban has been placed on short selling across the South Korean stock market until the end of June next year. Watchers are keeping an eye on market fluctuations and how they could shape the market in the long run. Our finance correspondent Moon Hye-ryeon has the details.
On Sunday afternoon, the South Korean government announced a temporary ban on short selling when investors trade with borrowed shares. The reason cited was to weed out naked shorting, which is an illegal practice of selling shares that might not actually exist, by making improvements to the current shorting system. Just a few weeks ago, the country's financial watchdog imposed record-high fines on two international investment banks for this practice. This is the fourth time that short selling's been prohibited, and the Financial Services Committee cited global economic uncertainty as another reason. The very first day of trade after the announcement showed the country's benchmark Kospi surging to its largest one-day rise in over 3 years, as well as a hike in the tech-heavy Kosdaq. This surge led to the activation of the Kosdaq sidecar limit, which is activated when there is a rise of more than 6% compared to the previous close. Over the next few days, stocks saw consecutive declines as foreign investors turned into net sellers, but the decline showed signs of slowing across Tuesday and Wednesday before rising again on Thursday. Some analysts say that this volatility is a result of foreign investors leaving the market.
There's a possibility that as institutions and foreign investors are unable to short sell, they also won't be able to keep up the same proportion of going long and therefore damage the soundness of the financial market.
Others say it's less about foreign investors and more about the psychological effects of the ban on individual investors, meaning that the market will stabilize soon.
I think the market rise in the first day was more psychological than real because so many individual investors had negative feelings about the market from the short selling.
The government is using this period to make improvements to level the playing field between domestic retail investors and institutional and foreign investors. There are also concerns about the ban preventing the upgrade of South Korea's stock market by Morgan Stanley Capital International to developed market status. Finance Minister Chu Kyung-ho addressed these concerns, saying that the government will continue to work on reforms until next June. Moon Hye-ryeon, 아리랑뉴스.